Hello, everybody. It is great to be here one more time today. My name is Gary Fowler, and I am the CEO, president, and founder of GSD, Get You Done Venture Studios, a premier AI and quantum venture studio located in the heart of Silicon Valley. I'm also the chairman of Runday. So I've been involved in startups for 17 years in several unicorns. I was on the original management team of Click Software, which was sold to Salesforce for 1.35 billion, and also Eva.ai. We believe that intellectual capacity is evenly spread around the world, but opportunities are not. And for that, I've got an incredible guest. I mean, he's all the way from being an attorney all the way today to doing impact investing and making this world a bit of a better place. And I'd like to introduce Rick Davis and bring him online. Hi, Rick. How are you doing today?
Doing well, Gary. Nice to speak with you.
Yeah, nice to see. So, how in the world you start off an attorney? You weren't there that long. What made you decide to get in business? What was it? Did you have one day you woke up and said, "Oh, I'm sick of this. I'm going to try this"?
No, almost from the get-go, I knew it probably wasn't something I was going to do forever. The clients I really enjoyed were the entrepreneurial ones, and so really found a pathway to getting back to that. Went back to business school, started working in a technology incubator, and then ended up in the tech space doing strategy and business development for quite a while. A lot of international work. But ultimately migrated into the clean energy, sort of clean tech space about 15, 20 years ago, and really found my home there. And it's all been sort of in that sustainability and then ultimately sort of even social impact realm, where I really sort of focused for 15 plus years.
So, when you were an attorney, what did you like and what didn't you like?
Well, there was a lot I didn't like. I don't want to besmirch my fellow attorneys, but the short of it was, I think I probably found it just too one-dimensional. And the things I liked, as I mentioned, were really the entrepreneurs. And what I recognized is they had a lot more issues than just legal ones. In fact, the legal ones were largely insignificant compared to their broader sort of business challenges, and that was intriguing to me and far more exciting. And so that certainly encouraged me to make the leap.
So when you started down and it's fascinating for me when you started, going from a lawyer to being, to doing recruitment and director of e-markets for Cyan. I remember Cyan, by the way. I remember Cyan and Viant, and then
Yeah.
we had started Broadient. Actually, one of the early e-commerce consulting companies. Quite interesting. But you hit it in January. How was that, Rick? What was it like? Because March, there was a meltdown, right? How was it? Because I remember Cyan was huge. Actually, I remember walking down Market Street in San Francisco. You guys had a big building there, and everybody was so excited. There were Cyan. This is a great company. But what was it like?
Well, no, it was the heyday, right? I mean, that was sort of the .com, heyday, and very much San Francisco being an epicenter. So it was fantastic. It was a wonderful experience. Still have friends who were colleagues there. None that I can think of that have moved into the impact space with me, but all still in the tech realm in some capacity. And it was fantastic. And honestly, Scient was one of those that actually continued to remain a relatively high flyer until the planes hit the Twin Towers, and then everything sort of finally fell apart for whatever was left of that zeitgeist died off then.
I remember. I mean, we did an IPO on NASDAQ actually in June. So in March, when the meltdown hit, we did Click Software, which is the company that was sold to Salesforce. But I remember going out, we had to make a decision whether or not it was going to go or not. And, the CEO of the company at the time, I was senior vice president, said we did analysis, and the companies that didn't go out after some extenuating circumstances like that generally went out of business. And so we went out, didn't raise a whole lot of money. I think it was 28 million, but it was enough to keep things floating for a while. And then, of course, 9/11 happened the following year, which was, the nail in the coffin. It was, slow. But hey, listen, there's resilience, and you come back, right? That's part of it.
Absolutely.
So the good news is, I remember walking down the streets in San Francisco after remember the sock puppet? Was it Pets.com? And we had all these things. I remember walking down the street after the meltdown, and you could walk down the streets and you could see the vacant. It happened very quickly, right? You could see people trying to figure out what to do with their companies because they had already been funded. Now, what do? Give the money back, or do they keep it going, trying to hope to make it? It was interesting.
Yeah.
So, yeah,
Crazy
amazing,
time.
crazy time. So you went down through that, and then as you went forward in your career, you went to Gartner. So going from talking about the strategy to actually doing marketing business strategy, and so and then Pellegrin. But how did you get into this entire? I love what you're doing because I like the impact space. So, um, you know, so how did you come up with this, and what made you decide to really go out and look at supporting these socially, environmentally impactful funds? Right. What was the turning point?
Well, and part of it was more financially motivated at the time than altruism. I was doing a lot of international work at the time. This is 2007 ish time frame, and I candidly had a young child at home, and being on trips to India or up late at night on phone calls in crazy time zones was starting to wear on me, and so made a conscious decision to migrate from some guidance of a friend of mine more into the clean energy, clean tech space. But it was largely predicated on just a good time to make that move, or so it was perceived. Hard to believe, but in 2007, early 2008, both parties' presidential candidates were advocating for a carbon tax and talking about the needs to address this issue. And, it seemed like the right time to ride the wave. Now I get into that field, and within a few months we have a massive economic meltdown, and both parties' candidates immediately forgot anything that had to do with climate, and were just trying to focus on their own skins and trying to keep country afloat ultimately. But I really enjoyed it. I enjoyed not only obviously the making money side of it, but also recognizing that I was probably at least trying to do some good at the same time. And I to this day, we're very big advocates of helping parties that haven't done things in impact to just do a little bit. It's part of why we advocate a lot of the use of philanthropic funds as investment into for-profit impact, because it allows parties to use money they've sort of already set aside, weren't expecting, and they can sort of test the waters. Because we do believe, much like I experienced myself, once you feel the benefits of delivering some good while you're making money, it's hard to go back just to making money, and not having some sort of higher mission within that purpose. I jokingly refer to it as getting hooked on the impact smack. We just need to give them a little taste of doing good, and then it starts to grow, and they want to do more.
Well, I mean, if look at where we are right now. You and I talked about global climate change, right, when we're at the conference. Yeah. Look what's happening right now. I mean, it's like this is a preview of coming attractions. Like I told you, as early as 2025, we're going to have this Atlantic current stopping. And now we're getting a preview of it. There's this incredible weather that's happening all over the planet that's not normal. Incredibly cold, right? Hurricanes coming in, or typhoons, or whatever we're calling in the region, happen in places they've not happened before. And so, it's incumbent upon us to go out. We need to reach across the hall and solve a lot of these challenges we got all over the board, across the board. How are we going to develop, get more food by 2050? We got to double the food supply. Can't increase the number of cattle because 26% of the pollution is methane gas from cows. In the same time, the average sea level could be up, 8 feet, 9 feet by the end of this century. People say, well, what's that mean? That means places like Mumbai, India are going to be underwater. And most of the, like Florida, right? You look at the coasts of Florida, nothing good happens on top of that, because you've got hurricanes that are way more powerful than anything you've ever seen, super hurricanes. So, it's incumbent upon us. And, for me, it's like, we should, that was my speech at the UN, but we should go down through and help each other and figure out, we got 8.1 billion people. What can we do to help each other? It's kind of like when I was a kid growing up on a farm in Pennsylvania. We used to go to the neighbor to get a stick of butter. You didn't have to ever, it was not a big deal, right? You go over and you get the stick of butter, a cup of sugar, whatever you needed. And, those kind of things, we got to figure out how to start working together or nothing good's going to happen, and we have time, but not a lot.
No,
So
I
I love what you're doing.
completely
It's great.
agree. Completely agree. That the good news is there are lots of initiatives. There are this was not the case a decade ago, but now there are lots of investment funds. There are a lot of projects. There are a lot of opportunities to put your funding towards something that can really generate some benefit. And as you noted, not just on the climate side, but it's needed.
It's across the board. We got food issues. We've got to democratize opportunity. Banking the unbanked in places like Africa, Nigeria, Ghana, Zambia. We've got to go down through and educate people about what you would do to be able to make this. You can't be burning wood. You can't do. We now the situation. We talk about heat, electricity. But, we start looking at 75, 100 years from now, we're not going to have fossil fuels. What do we do next?
Absolutely.
Our grandkids are going to go through this stuff, right? They're going to have to go down through and face these challenges. They're going to live a lot longer than they ever have. They're going to have all kinds of infectious diseases that they've never seen because it's warmer. Let's go down and get ahead of it. Let's figure it out. Let's make this world better. So I love what you're doing, and you're right about it. We got to get it in front of people so they understand, because if they understand and not like an ostrich, right, putting their head in the sand, if they understand, we can all make a change together.
Yeah, our biggest challenge as an organization isn't, say, traditional competition. It's education. It's raising awareness of not only what the opportunities are out there, but how you can utilize various financial strategies to get involved and to participate in some meaningful way. Ideally, improving your own financial returns as well as generating some sustainable impact.
No, I agree. So what's the future like? What's going to happen over the next couple of years for Rick? What's going to happen in terms of LOHAS and the kind of things you're working on?
Well, LOHAS continues to grow, and we continue to add clients. We do a couple of things. We run a donor advised fund, as you know, that's sort of focused on enabling donors to use their donated funds to invest in for-profit, private sector, impactful endeavors. Could be companies or funds or projects. We actually do quite a bit in the social impact entertainment sector. So if there's a movie telling the right story, you and I have talked about that.
Yeah, no, we're working on that now. That's that's part of it, because if we can tell real stories about something that occurred, that's a preview of coming attractions. You want to take a look at it, because
absolutely. And we're big advocates of parties of using tax deductible charitable funds to help support those endeavors, or to be intelligent about how they invest those funds. Because we know entertainment can be, for example, a risky proposition at times, and what a better place to leverage, money out of a donor advised fund or a private family foundation grant or something in that vein to help get those things on the screen. So we do that, and then as you know, we also work with a lot of impact investment funds, primarily venture and private equity funds, touching really every corner of the impact space, not just climate, but all sorts of social and impact areas as well. A lot focused on diversity and racial wealth gap, gender issues, but really touching health and regenerative agriculture and oceans, and you name it. There's a fund investing in it, which I find terribly encouraging, that we now have for-profit pathways to to not only help generate real impact, but also meaningful, market rate type returns.
No, that's fantastic. In fact, Runday, which is the company that I'm the chairman of, they actually have gone down through and they're starting to work with family office groups, around and providing that hyper personalization. It's quite interesting for calendaring and scheduling and that kind of thing, because the problem we have is we're inundated with information. We've got infobesity, You know, I don't know about you, but we have about 300,000 items in our personal cloud. The entire web in 1996 is 257,000 websites. You have more information in personal cloud, the entire web. Part of the challenge is we can't think about other things is because we can't find stuff we already got, right? And so the amount of information in Rick's world is doubling every year. In 5 years, you're going to have 10 million items. If you think it's bad now, how many times the last 2 weeks somebody said, "Hey, Rick, I sent you something. Did you get it? Where'd you send it?" I sent it to your email. Which one? I sent it to your Gmail or your corporate or your Yahoo, one of your 7 different addresses, or I sent it to LinkedIn messaging, or I sent it to Slack or wherever. You could have 20 some sources. Well, we send it again. I can't find it. We're so inundated with infobesity that it's really crippling us. In psychology, they call it learned helplessness. So part of the path is giving people the information. They just don't have it. It's so hard to, every day you struggle to keep on top of the information overload you have. So these tools that are going to help us do it are going to be critically important, right? Almost like, a hyper-personalized, like your grandmother that cares about you and loves you, that tells you the kind of things you should be doing, right? Because you're so busy, you can't figure it out.
Well, I know you're leading that charge.
Yeah, I mean, it's just the way it is. It's interesting. It's so crazy, right? It's like, this thing about global warming, part of the reason people don't do anything because they don't know enough about it. Some people think it's
or what
conspiracy.
they can do. Folks may throw things in the recycle bin, but our focus is heavily on investors, individuals, families, their advisors that are trying to figure out pathways to obviously make a buck, but also to do some good. There is a huge upswell of interest in socially and environmentally impactful deployments. But you're right. It's challenging to know what those next steps are and how to take them most effectively, and maximize your own returns, your own mitigate your tax situation, but also trying to do things you care about. And that's where we focus, is trying to help parties think about those things and do them intelligently.
So who are the people that you work with? So you're working with family offices, who's the target, right? Who's like saying, oh, they're trying to find Rick. Would that be the family offices that you're looking for?
It's a few different groups, and it sort of depends what they're trying to do. So we certainly work with the individuals and families that are wanting to do more impact investing and recognize they could be using philanthropic pathways, say a donor advised fund type dollars or private family foundation grant dollars, to do that. And so, we work with them on that front, and we often work with their advisors, advisors who have clients that want to do more of that, but maybe it's not their area of focus. And we're not an RIA, we're not a wealth manager, we're not, competitive in that financial advisor world. We're just sort of the helping hand that helps them maybe think through some strategies and use some right structures to do more on that front. But we also work with groups that are in the impact space, fund managers and the like, that are raising money in the impact space, and help them tap into philanthropic pathways in the sense of giving them the tools so they can go out and raise that kind of funding that we can redeploy as investment in their funds. And then, the obvious corollary to that is if we've created a nonprofit structure that is supporting an impact investment fund, we're working with funders out there to give them, access to those sorts of opportunities. But traditionally, your nonprofit, that a grant, for example, that a foundation grant would be looking at, the story the nonprofit's giving them is one of, hey, I'm soliciting money. I'm going to go do some good with that money. And then when that money's gone, I'm going to come back and ask for more money so I can continue to do good. Whereas, we're creating structures that allow the nonprofits to go to, that are supporting funds, to go to those same foundations and say, hey, look, provide a grant to our nonprofit. It's going to deploy it as an investment in this for-profit investment fund. It's going to generate real impact, real measurable impact, but it's also going to generate real market rate returns, so it can be reinvested in a sustainable.
Well, I mean, that's the stuff that's really interesting, right? And then the other thing is, because sometimes you invest, and by the way, only a little portion of what you invest you ever really gets invested, right? They start, there's infrastructure costs and everything else. And so I love what you're doing because you can actually feel it. Plus, you can make money. It's a win-win, right on the other side of it, people care. But if you say, how long does it last if people don't see a return on it? They forget about it. But if they start seeing a return, they really toot their own horn and they start going out and talking. I think it's great. It's fantastic. So, you look at it, how is the world going to change with this? Do you see more companies like yours coming out and start to really care, they're trying to get the message out and spread goodness, if you will? Do you see that?
I absolutely see that. I also see a lot more parties, like I just mentioned. Like there are a lot more individuals and families that want to do this stuff. There are a lot more impact investment funds that are out raising money and investing in good things. There are funders, foundations and others, corporate foundations that are seeking more innovative pathways for deploying their capital. And so I think all of those are very positive signs. I mean, just at a very simple level, we'd love to give families, when I think about the future, a mechanism for using their donor advised fund as an educational, as an investment education tool for the younger generation. So for their kids, grandkids, mentees, to be able to use money that they've set aside, but then invest alongside their children. So, they can see things like, deal sourcing and due diligence and investment management and learn those skills, but doing so with money that, has already been set aside and is not expected to make a return. But then they can invest in things that the kids care about as well, which tends to have some sort of social environmental, focus to it. And so, impact can be a bridge builder within families, but, we want to give them the tools to be able to do that easily.
No, that's fantastic. I love it. So we're coming up to the top of the show. Your closing thoughts and what's the best way for people to get a hold of you, Rick?
Well, it's LOHAS.org, LOHAS.org. Do you know what what LOHAS stands for? It's an old term. You and I have been around the block a few times. It's a 1980s consumer market segmentation term. Stands for lifestyles of health and sustainability, and refers to that segment of the market that makes buying and investment decisions on, is it better for people or planet? And we co-opted that term many years ago. We've been around a while, but it's LOHAS.org. If you're looking to do things in the impact investing space, and would like to explore different avenues for doing that, or as I mentioned, you're an impact venture fund manager, whatnot, entertainment producer, looking to raise money and recognize there may be parties that want to participate using charitable tax deductible dollars, we can support that as well. So it's, would invite folks to come to the website and reach out accordingly if that's something that they think would be of interest to them.
Yeah, that's great. Well, thanks for taking time out of your busy schedule to join us today. It's really appreciated. And thanks for all my audience for coming one more time to Run Day Presents Silicon Valley AI and Tech. It's a pleasure to be here today. Stay happy, stay safe, and stay healthy. And I'll be back to you again in another exciting edition. Take care, Rick. Take care, everybody.
Take care.